Street, Nucor shares under pressure despite reporting the biggest quarterly earnings ever, $2.1 billion for the company. Here to break down the quarter, Nucor President and CEO Leon Topalian. Leon, great to have you on the show. Thanks for joining us this morning.
Thank you for having me, Morgan. Looking forward to it.
So I realize that the street is not responding very well today to the numbers, but just to put it into perspective, record results, and at $7.28 a share, this almost matched your full year earnings record of $7.42 back in 2018. I mean, we've known that steel prices have been on fire this year and that the market has been very strong. How sustainable is that, not only going into the fourth quarter, but into 2022? What do you see when you look out over the coming months?
Yeah, I couldn't be more proud of our team, Morgan. First, in the safety and health and well-being of our team, we're on pace to have the safest year in our history. But as you pointed out, 728 reflects the strongest quarterly performance in the history of our company. And so, as we indicated earlier, we anticipate that Q4 could be as good or even better in setting another record in the fourth quarter of this year. So the end market demand in our customer segments that we serve remains incredibly robust. We see that continuing well into 2022. So again, I think there are a lot of positive indicators, and certainly some, as we talk about supply chains and others, that certainly could be some headwinds as we think about manufacturing in the United States.
Yeah. So is it safe to say that you see steel in a prolonged cycle? And I ask that because a couple weeks ago, Goldman Sachs came out, downgraded steel makers, including Nucor, and basically said that they see the market maybe anticipating a correction in the coming months as additional import volumes arrive, new capacity begins operations. Do you think that's wrong?
You know, what I think is there's been structural changes in our industry. I think the supply-demand will ultimately dictate pricing, but the supply-demand picture, particularly supply, is much different than it was over the last 24 or 36 months. It's much more leveled, and as we are anticipating and seeing today higher highs, we also anticipate higher lows. So there may be some corrections, Morgan. I don't think we're going to see the drop-off, and I think that's one of the things that the analysts have got to continue to watch, and Nucor's got to continue to perform. And as the most profitable steel maker in North America, we're very confident that we can continue this.
Yeah, in terms of capacity, you're putting $2.7 billion to work on a new state-of-the-art sheet mill that's going to be, it looks like, in the Appalachia region. What is that going to enable the company to do?
You know, we're incredibly excited about that investment. Look, we are a growth company. We're going to remain a growth company. Part of that is going to come through organic growth. The greenfield announcement of a $2.7 billion sheet mill is going to reflect pieces of that. It's going to differentiate ourselves in being in the largest sheet consuming region in the United States, and the customer segment that we serve needs and wants this. Wants it from a cost position, but Morgan, also from a sustainability position, generating the cleanest steels in the world, and Nucor is on the front edge and leading edge of that. We've just announced a brand of family of products called Iconic that will offer net zero products to our customers that need those to deliver net zero targets for their end use in their companies, like General Motors and many others.
Leon, in a lot of categories where there's been tight supply and prices have been going up, there's been some sense out there that customers are kind of incorporating this into their planning and their mindset and double ordering and pulling forward more than they need in terms of supply. Is there any risk of there being a little bit of a cliff out there as supply rationalizes, or are you seeing actual true organic demand mostly in your customers?
Yeah, that's a great question, and it's something, really all year we've been very active. And one of the things that I would tell you that reflects that we don't see that is the relationships we've built with our customer segment over the last 20 or 30 years. So we really have stayed very close to understand their end markets and how their end customers are using the steel. And so I think while there could be some of that, we think that's a very small percentage of the overall backlogs that reside in Nucor today.